Welcome to Wealth Hustle 247 podcast, your trusted guide to financial literacy, business innovation, and entrepreneurial success. Learn how to grow your wealth, make informed decisions, and turn your ideas into profitable ventures.
In 2026, passive income isn't about hype. It's about strategy, systems, and smart execution. In this episode, we break down real passive income ideas that are still working today, even in a fast-changing economy. From digital assets to scalable businesses and modern investments, you'll discover practical ways to build income streams that grow while you sleep. If you're ready to move beyond get-rich-quick myths and start building sustainable wealth, this conversation is for you. Press play and take one step closer to financial freedom.
Welcome back to the deep dive. So today we're tackling a topic that I think is on pretty much everyone's mind.
Oh, for sure.
Especially, around 3 p.m. on a Tuesday, when you're just staring at a spreadsheet and thinking, there has to be another way.
Yeah.
We're talking about passive income. But we are looking at a document titled Passive Income Ideas That Still Work in 2026. And I want to be really clear. This is not the Instagram version of passive income.
No, and thank goodness we are not here to talk about the whole, press a button, sip a coconut fantasy.
Right.
I mean, that narrative has done so much damage. And the source material we have today, it's just refreshing because it starts with a pretty aggressive reality check.
It really does. The intro basically just destroys that whole concept of effortless wealth. It defines the 2026 landscape not as a place for lazy money, but as an era of building, and I love this term, smart systems. It implies engineering rather than, magic.
That is the crucial distinction. I mean, in 2026, passive income isn't about doing nothing. It's about front-loading all the effort.
Right.
The text defines it as creating systems that generate recurring income over time. So
Yeah.
you're trading a big chunk of upfront labor or capital for freedom later on.
Which brings us to the mission for this deep dive. We need to go through this list, which, it covers everything from old school real estate to AI licensing.
Yeah, it's a huge range.
And figure out what's actually resilient. The source emphasizes ideas that can withstand economic shifts, and given the last few years, resilience is probably the most important thing to look for.
Absolutely. The document groups them into a few categories,
Yeah.
but I think it's helpful to think of them by the kind of leverage they use.
Yep.
You've got your tangible, capital-heavy assets,
Yeah.
the stuff you can touch. Then you have the digital and intellectual assets.
Right.
And then you've got the sort of the frontier tech.
So let's start with the tangible stuff, because for a lot of people, that's still what investment looks like in their heads. The source lists Category 1 real estate as a foundational pillar.
It is.
Now, even in 2026, why is that still the heavyweight champion?
It's simple supply and demand, really. The report points to population growth and housing demand. People need a physical place to live. That has not changed.
True.
But what's interesting is how the text breaks it down. It's not just go buy a house and be a landlord.
No, because being a landlord is often just buying yourself another job, a very stressful one.
Exactly. So the text distinguishes between, direct ownership and more passive things like REITs or syndications. And I think syndications are worth talking about for a second.
Okay, what is that exactly?
It's basically a group investment.
Yeah.
So instead of you trying to buy a 50-unit apartment building alone, you pool your money with a sponsor who manages a whole deal. You're a limited partner.
So you get the benefits, the cash flow, the tax stuff, but you aren't the one fixing the boiler at 2 in the morning.
Exactly. But the trade-off, and it's a big one, is liquidity. Your money is locked up for years.
Right. Compare that to REITs, real estate investment trusts. That's the other option mentioned.
Yeah, REITs are the liquid alternative. You're just buying stock in companies that own real estate. The text says they're great for consistent income, but you do lose some of the tax advantages. So it's a trade-off, ease of access versus the depth of the benefit.
Okay, so staying in this sort of financial engine lane, the source also covers dividend investing and financial yield instruments. I kind of see these as the ballast for the ship.
That's a really good way to put it. They're not sexy, they're not going to make you rich overnight, but they keep things steady. The source specifically mentions consistent income and long-term compounding for dividend stocks. And in 2026, with all the market volatility, having established companies just paying you to hold their stock, that's a great hedge.
And what about the other category, the financial yield instruments? It lists bonds, money market funds, and P2P lending. That last one, peer-to-peer lending, I thought that had a bit of a rough time a few years back.
It did, But the text suggests it's matured. It's a steady option now. You're basically playing the role of the bank. You lend money, you collect interest. It fits that smart system definition because once your capital is out there, the return is passive. Assuming you did your homework, of course.
Right. Okay. Before we leave the physical world, we have to talk about automated businesses. This one always feels a bit like a TikTok trend to me.
The buy a vending machine and retire thing.
Yeah, exactly. But the source actually treats it pretty seriously.
It does, but it focuses on one key phrase: minimal daily involvement. So we're talking laundromats, kiosks, high-end vending machines. The appeal is that it's a cash-flowing asset that doesn't eat a person there for every single transaction.
But the economics are different, right? Unlike a dividend stock where you just click buy, a laundromat needs serious capital expenditure. You're buying machines, leasing a space.
You are, and that's why I'd call this semi-passive. The machine does the work, yes, but someone has to maintain the machine.
You or someone you hire.
Right. The source frames this as a good option for people who want tangible, local control over their income, a real-world system.
So that's the world of atoms. Capital intensive, a lot of upfront work, but stable. Let's flip to the world of bits, the digital and intellectual stuff.
This is where the leverage just changes completely. With real estate, you have marginal costs, right? A new tenant needs space, water, maintenance.
Sure.
With category 2, digital products, you hit basically zero marginal cost.
This is the scalable global income the analysis talks about. If I create an ebook or a software tool, it costs the same to sell it to one person as it does to 1 million.
That is the holy grail of modern passive income. You build the system the product wants, and the internet is your sales and distribution team.
But here's the pushback I know some listeners are thinking. Saturation. In 2026, hasn't every online course already been made?
That's a totally valid fear. But the source counters this by focusing on specialized knowledge. It's not about making a generic intro to marketing course.
It's about going niche.
Very niche. It's about solving a very specific problem for a very specific group of people. The internet lets you find a global audience for something that would be too small to be a business in your local town.
So the smart system here isn't just the product, it's the targeting.
Precisely. And that connects directly to the next category: content monetization. Blogs, YouTube, podcasts. The key phrase that jumped out at me here was the long tail.
Ah, the long tail. I love this concept. The idea that your content is an asset that keeps working for you.
It continues earning long after creation. That's the real aha moment.
Yeah.
Most people treat content like it's disposable. You feed the algorithm today and it's gone tomorrow. But if you think of it as a library of answers to problems, it becomes a passive income engine.
You're building a little digital toll road.
That's a perfect way to describe it. And very closely related is category 4, intellectual property. This feels like the most sophisticated version of the digital bucket. We're talking books, music, patents.
This is pure ownership rights.
Exactly. When you sell a course, you're the merchant. When you own IP, you're the licensor. You let a publisher print your book or a streaming service play your song, and you just collect a royalty check.
It's the ultimate detachment. You're not even doing the selling. Someone else is, and they're paying you for the privilege.
And that mechanism, licensing, is the perfect bridge to the final and honestly most futuristic section of the document.
The frontier. Category 8, emerging opportunities. This section definitely feels very 2026.
Oh, yeah.
We're talking AI licensing, Web3 staking, and tokenized assets. Let's start with AI licensing because that seems like a direct evolution of what we were just discussing.
It is. A few years ago, artists were terrified of AI scraping their work. Now, the source suggests a whole market has emerged where you can actually license your data to the AI models.
Wait, how does that work? I'm not just uploading a photo, right?
No, you're licensing a structured data set. Let's say you're a photographer with 50,000 images of urban architecture, or a writer with a huge archive of dialogue. In 2026, AI companies need clean, legally sourced data to train their models. You license them access to your archive. You're selling the raw material for the AI's intelligence.
Wow. So your entire back catalog becomes fuel for the new machines? That's a wild concept. It turns your archive into a recurring revenue stream.
It basically frames data as its own asset class.
Mm-hmm.
And speaking of new asset classes, that brings us to tokenized assets and Web3 staking.
Tokenization is something I find really compelling because it kind of circles all the way back to our first topic, real estate.
It closes the loop perfectly.
Yeah.
We said syndications are great, but they lock up a lot of capital for a long time. Tokenization tries to solve that. It takes, say, a $50 million building, puts the ownership on a blockchain, and then splits it into millions of tiny pieces or tokens.
So I can buy $50 worth of a skyscraper in Tokyo.
Exactly. And you get your tiny share of the rent dividends paid instantly to a digital wallet. The source calls this a future forward option because it just democratizes access to these huge assets.
And staking, what's that?
Staking is basically the crypto version of a high-yield savings account or a bond. You lock up your crypto tokens to help secure the network, and in return, the network pays you a yield. It's a smart system made of pure code.
But, and I feel like I have to be the voice of reason here. The risk on this frontier stuff is, it's a completely different universe from a U.S. Treasury bond.
Oh, absolutely. The source is very clear about that. They're called emerging opportunities for a reason. The upside is high, but the volatility is too. You would not want your emergency fund in a staking contract.
Right.
But as part of a diversified strategy, it offers a type of growth that the traditional sectors just can't match.
Okay, so we've got this massive menu. We have stable real estate, scalable digital products, tangible vending machines, and this high-tech potential of AI and tokens. But a menu isn't a meal. How does the listener actually put this all together?
That's the million-dollar question, isn't it? And the conclusion of the document pivots from ideas to strategy. It lays out 3 specific pillars for success in 2026.
Let's walk through them. Let's make it practical. Let's say we have a listener. We'll call her Alex. Alex has a day job, maybe 10 grand in savings she wants to use, and maybe 5 hours a week of free time. How does she use the first pillar? Automation.
Okay, so automation just means building the system to run without her. If Alex starts a blog, she shouldn't be manually emailing things to customers.
She needs the software to do it.
Right, the software stack to handle payment and delivery. If she chooses dividend stocks, she should set up auto-investing. The goal is to remove herself from the day-to-day loop. If you have to touch it every day, it's a job.
Got it. Okay. Pillar 2, diversification.
Huh.
The source warns against putting all your eggs in one basket.
Right, so if Alex puts all $10,000 into a single crypto staking pool, that is a massive risk. A resilient 2026 portfolio would be more like, say, 5 grand in a solid dividend ETF for stability.
Okay.
Maybe 3,000 in a REIT for that real estate exposure. And then maybe she uses the last 2,000 to build her own digital product or maybe test the waters with some tokenized assets.
So when one market is down, another is hopefully up, or at least stable. It's about not having a single point of failure.
Exactly.
And finally, pillar 3, disciplined execution. This feels like the part where most people fail.
It is. Everybody loves the idea of passive income. Very few people love the passive income setup phase.
Yeah, the setup phase is just work. It's writing the ebook, it's researching the REIT, it's setting up the company for the vending machine. It's not passive at all.
And that's what disciplined execution is. It's sticking to the plan during that building phase when you aren't getting paid yet. The text is clear that this is a long-term play. You're building a machine. You can't expect it to work before you've finished putting it together.
I think that's the perfect way to sum up this entire deep dive. We've moved from the fantasy of get rich quick to the reality of get wealthy slowly and systematically.
That's the shift. It's moving from a laborer mindset, trading hours for dollars, to an architect mindset, designing systems that generate value for you.
And the incredible thing about the 2026 landscape, which this source lays out so well, is that the tools to be an architect have never been more accessible.
They really haven't.
Whether it's AI or blockchain or just global digital distribution, the barrier to entry is lower, even if the need for smart execution is higher.
The opportunity is there. It just requires the discipline to actually seize it.
So here's the final thought I want to leave you with. We've unpacked the ideas, the risks, the strategies. When you look at your own income streams right now, ask yourself this. Are you just looking for a lottery ticket? Or are you ready to do the unglamorous upfront work to build a smart system that grants you real freedom later?
Because that freedom isn't free. It's bought with the systems you build today.
Something to think about. Thanks for diving in with us.
See you next time.
That's it for today's episode of Wealth Hustle 247. Be sure to follow, like, comment, and share with others. Keep pushing toward your goals, and we'll see you in the next episode.